This is just a prelude and kind of an intro and a Q&A more than going around a horn and doing any type of pitching right now. This is just really for you guys to ask Matt any questions about what they do at leAD Sports, and then we'll get into a little bit more about what we're doing on November 11th. This is very, very casual, so just feel free to ask away. So it's yours.
Yeah, thanks, Rob. No, really excited to speak with everyone. So I'm Matt. I'm managing the program here in Lake Nona for leAD Sports. And like what Rob alluded to, we've kind of planned an event for November 11th, but I think we've been chatting since 2020. So back in the darkest days of the pandemic as well. And it's kind of come full circle. We figured things out. It's like anything in the startup world. We had to adapt as platforms and organizations, and we saw a lot of potential to collaborate. So this is the first event, again, somewhat being affected by COVID. We were hoping to have more of an in-person event, but I think this one will work out a lot better, and it's actually been really exciting to kind of see the development of it. But yeah, I've prepared a few slides just to kind of go through leAD, who we are, where we're going as well. I suppose the future is key, and then how our vision fits into the vision at GamePlanU, and then as kind of organic validation. You know, we have a portfolio company that was a member of GamePlanU before leAD, and Jerry stayed there for some years. That's Carter. And a lot of our deal flow that we've seen that have made it to our top 25. So out of, I think this year there was 495 official applicants. So we only we don't count the intro calls, we just count the applications that come in. So we had 495 of those. And usually we sit between 350 and 500. And, you know, Max Montre was one of our finalists 2 years running as well. So top 25. So a lot of validation, and I think there's two others. A lot of our mentors overlap, a lot of our investors overlap. So a lot of synergy. Yeah, of course. So I started with leAD almost 2 years ago, more so as a scout. So I came from the world of healthcare. I was a physiotherapist. I mastered in sports medicine, using a lot of the tech that I'm now working with, because it was really important for me as a clinician to improve the patient experience. And that kind of started internally first. If you think workflows, communication. So if you see kind of specialized in biomechanics, lower limb biomechanics as well. So in surgery, and then kind of went more for clinic. So again, I was using a lot of different technology, starting out super basic with just my eyes, and then upgrading to, you know, the next, I think Dartfish was an application you could use on your phone. I'm sure if I had met Max by that stage, he could have given me a lot more advice on which platforms were great in terms of taking a visual assessment using just any easy hardware. And then it graduated up to more advanced hardware as I moved up. And then, well, so kind of acting as the industry eye, I suppose, when it comes to a lot of the tech, when it filters through our due diligence process. And then, yeah, I use my clinical skills a lot more than I realized, because we don't really send our analysts out first. We like to kind of get on, and it's more like a top-down approach, and our analysts, you know, validate it. Because I can get super excited by a healthcare product, and then Mina might have some commercial questions, or vice versa, and I might have some questions on kind of the end user stage. So that's kind of a little bit about me. And like I said, with leAD since, you know, almost 2 years, and kind of just climbed the ranks slowly. You'll see later in the presentation, we're still a lean team for a global platform, the core team that is. So yeah, we operate very much like a startup. So it's really fun. Like Nona, so leAD started in its original form in 2016 in Berlin. So back then focused on connected athlete tech, fan engagement tech, and then esports and sports betting. Data shifted a lot more quickly than was ever anticipated. And, you know, we had this working thesis then in 2019, just before I came on, that, you know, sports tech is starting to eat into health tech, and vice versa. Health tech was trying to capitalize on, you know, we don't need FDA regulation if we just market directly for sports and healthy populations. So just as I started then, we were focused on kind of cementing ourselves not only kind of in North America, but also within the healthcare side of things. So within that spectrum of sports and health. And leAD like Nona was born from that. So we're based out of Orlando, right up the road from Rob and the guys at GamePlanU. So we like to consider ourselves an end-to-end startup ecosystem. Our vision moving forward is really to grab you when you have the idea through affiliate partners, through, you know, maybe it's a joint venture at an earlier stage that we're supporting, and then have a vehicle that could, in theory, take you all the way through to an exit. So typically what happens is we're starting to see about 80 to 90% of our deal flow coming through what we call our academy business unit. So that's where we run, manage, organize all our programs. So, you know, leAD like Nona is just one of them. We've just launched a boot camp in Tokyo as well. And we run the programs out of Berlin. So that all sits within our academy bubble, really our capturing stage. There we launched a seed fund, so the second vehicle. So previous to that, our shareholders would syndicate together, and between 2017 and 2019, so before the inception of leAD like Nona, we still invested, you know, close to $12 million in those companies, but it just wasn't in a very structured way. And we had our Series A tech fund, which was, you know, launched at the same time, but you can't go from, so our fund was always on the cards, and it just made sense, obviously, with the shift in consumer behavior and, you know, where sports was really going. And as I said, healthcare using sports as a platform to really monetize early on, while, you know, you're working on FDA approval, class 1, class 2, A and B medical device classification as well. So that's currently sits as a $30 million fund. As with any business, any round, there's always the potential to oversubscribe that as well. Super successful, closed the first tranche. Again, you know, we're almost close to completing it and closing it out about 8 or 9 months ahead of schedule, which is great. And again, that's just, you know, it's still 80% work and dedication to getting those checks in, but it's another 20% of, you know, right place, right time in terms of where the market's at. Currently about 20% of the deal flow, and that's not mutually exclusive. Some of that could come through the academy, and then obviously it's referred on. We'll run through, or we expect it to kind of run through the seed fund, but they'll only make on average about 2 or 3 external deals a year. So the thesis is that somewhere between, so if you're one of the top 6, the 1%, so we see 600 companies, we take on 6, 2 to 3 of those companies are up for investment from the seed fund. It sits as a separate vehicle, so an independent board, independent investor committee. Only thing that connects them is the same joint venture partner, because obviously we have the same interests in terms of things. The academy is the door to all of this. It unlocks the whole ecosystem, and, you know, the ecosystem itself is valued, you know, higher than any capital investment that might come through the fund. The fund is just an additional vehicle, you know, that's looking at these 6 companies. There's no better due diligence than a 4 or 5 month accelerator program, where we can really, you know, understand your adaptability, your coachability, your progress over time. So there's a lot of metrics that we look at, and we get to know everyone really well. So it's really is great to be a part of.
Matt, could you talk a little bit about, before you go, just a little bit about Tavistock?
Our joint venture partner, they are an investment, private equity investment firm, that, you know, headed up by a man by the name of Joe Lewis. So current net worth is probably like 3.5 to 4 billion, quite the wealthy man. And Joe wanted to create somewhat of a legacy in terms of, you know, he wanted to put the money into innovation, into sustainability. And through Tavistock Development, they also, through the investment fund, they have a development arm, which is actually owns most of the land between, I think it goes out west, so from Orlando to somewhere out near Tampa as well. So quite a lot. And Lake Nona really sits as the town center. So we act as the innovation arm with them as well. So again, scouting, finding the companies that fit our investment thesis, and really, supporting them throughout the whole entire journey. So Tavistock are really there. That's the president, the mayor, the city council, the parks and recs department. So we don't have any hurdles. If you wanted to put a 5G node up on top of the highest cell phone tower, it's all managed from the office across the road. So it's completely frictionless, which really, really helps with accelerating the innovation and growth. Our deal sits at 75K for 8%. Sometimes, the program has a value to it as well. And very much on a case by case basis, we can go up to what that program value is. So most of our companies will, see the potentially go on like a small down from a 1.5 to a 1 million valuation. Or if we really see potential, we'll meet that then all the way up to between 3 and 5.5, 6 million. In-kind contribution, in theory, you can put any number down, but you want to be realistic, because otherwise it makes it a little bit difficult then from our perspective, making a return in the future, because we don't make any money on our programming. I'd be surprised if we break even. We're really invested in your success over time, and your success is our success. So yeah, it's really important for us. Like we come in, there's an 8% stake, 4% lead, 4% Tavistock. So in theory, we're just 4% of your company, but we want to be 80-90% of your resources, and act like that throughout the journey as well. The companies last year all came in, as I said, typically around $1 million valuation, and most of them are raising between 8 and 11 million pre-money. We've helped them raise close to 12 million so far. And one of them's actually at a 20 million pre-valuation. So we've, like that, the only vertical that's really changed since inception is that health and well-being has really come in as its own, and not so much a derivative market, which it would have been back in 2016, 2017. And then fan engagement would then encompass sports betting and esports as well. Connected athletes hasn't really changed too much. I mean, the market has kind of gotten a little bit more dynamic, larger additional verticals have shown up. So, you can really see that the size of the markets, and I'm sure I've left out one or two key areas of fan engagement. Again, this isn't going to look at the whole, the great thing is mental wellness really does sit between both, and mental preparedness. We broke records in 2020, breaking records currently in 2021. So, 1 billion in 2020 were, these figures are actually from the end of August. So again, 790 close to million from venture capital in the industry across 103 rounds. And that's really the ratio you want to look at. You want to look at the number of investments and how much was invested, because we're actually seeing the number of investments somewhat get a little bit smaller, but the amount of investment going up as well. And that'll also, by looking at that kind of ratio, or like breaking it down like that, you'll start to understand, okay, where is most of the money going? Like if there's a, what was Whoop, 200 million, 250 million in one deal, it's not really representative then of the very early stage guys as well. But yeah, August alone was a crazy month. And then I think September started off with another 80 million raised by a sleep tech company as well. So August, quite a small team. I actually missed someone who's our director of program and marketing as well, Natalie. She should actually be in the bottom left corner. But this is the core team, and then around that we have some analysts, some entrepreneurs in residence who come on board to support us as well. But it's really just to get across the idea that if you think too corporate, you'll be too corporate. We're super happy that, even though we're affiliated with the family of Adi Dassler, we're not, governed by Adidas. That's a separate, global partnership that we have, but we're not their innovation arm. We make introductions to, everyone, and it really forces us to also continuously think in a lean startup mindset. And again, this is just the core team. We have our partnerships team, we have our business development team, but in terms of the structure of the program, so this is specific to the program, we're kind of the ones behind it. And then we structure the program across our core principles. So strategy, commercial side of things as well, leadership, finance, fundraising, legal, and IP. So those are kind of the core modules. But because we're only taking on 6, we can be super specific in terms of, we want to personalize the journey. So company A needs to really focus on strategy, but company B might only need a 10 or 20% weighting of that. We do really in-depth onboardings. And then ideally we want to have a unique customer journey flow through. And then what do we want to do? So, our academy consists of our Berlin vehicle, our Lake Nona vehicle, and now our Tokyo vehicle. We have our Lake Nona fund, but then we have a vision, for a second fund, a third fund, a family of funds as well. So these are smaller vehicles or larger vehicles that deal with whether it's impact, diversity, equity, inclusion, early stage vehicles to, even if you're as young as a middle schooler with an idea, how can you get across that, like the barriers you think are there aren't there, or you're in university or you're just outside it, you're still kind of working just to get the dollars rolling in, but maybe there's a part-time program. We meet once every week, virtual or in person, and it's kind of like from idea to founding a company as well. So this is more the global vision.
I'll just kick it off real quick and then we could go, you guys could ask away, but just tell us a little bit about, just talk about this November 11th event. What are you guys looking for? What do we want to accomplish out of this event?
Yeah, so from my perspective for the November 11th event, it's really an opportunity to connect our two ecosystems just in a more formalized way. The idea being, we're going to invite those mentors and investors that sit in the middle of our Venn diagram, additional people from the leAD side and Tavistock side, and some external people then from the GamePlanU side. It's a great way to learn, because any opportunity is an opportunity for investment or mentorship or some form of collaboration as well. And I think that should really be the output of what the November 11th event stands for as well. I don't want leAD to become this exclusive accelerator or platform in any way. Like, I think having an event that ties two networks together that deal with startups over various stages is really important. The ask isn't always cash. The ask is mentorship. The ask is, conversations, network, ecosystem. And, that's what we want to be able to provide. Really want to see where everyone's at. We don't just run one program a year, we run two. So we'll be kicking another one off. And candidly speaking, this is also a scouting opportunity for us. So like I said, there's always an opportunity.
More of that. What do you think the chances are of a platform like this being looked at and or at least being discussed a little bit?
Yeah, no, it's a really good question. I think new sports are great. When we see them come through, I always get excited when there's an event is one aspect of the business, and then you use that event then to collect data on the users, and then the users when they're playing that at home. So whatever it is, new sport, score 1, so they're on an 80. And if you're able to kind of classify and stratify and gamify in terms of, okay, I'm new to this sport is new to me, I'm coming in at a level 10, okay, I want to get better, I want to go to an event then that's level 20 and up, level 30 and up, and kind of advance that way. It's really about the user experience, user journey. And a question I always ask early on is like, where is the value now and where's the value in the future? Because right now the value could be around, okay, no, we're very focused on an events-based model to bring people in, highlight the sport, collect the data, and then we're going to shift into, an issue a lot of the times, and like candidly speaking with new sports and new events on, even though it's a disruptively new in the sports space, it might only be incrementally, in terms of, it's a slow burner to get bigger. It's like, okay, how can you apply the same model in a different sport? Because venture capitalists, they like to see solid plans over 12 to 18 months, realistically speaking, because it's all monthly recurring revenues. It's, you can make assumptions up to 5 years, but really it's like, okay, if you're looking for $1 million, how far does that get you over the 12 months? And just being super detailed in the first 12 kind of really, really helps. And then like that understanding where the value is now, where it is in the near term and where it is in the future, and scaling from there. If you're not learning anything, then ultimately you're probably failing at some extent. But if you're still learning, if you're still motivated, the passion is still there, your why from the very, you know, from the seeds of the idea are still there, then there's something to it. You know what I mean? It's only when I find that when you stop learning and you start just being persistent, and I've seen it in founders before, that's typically like we can read that. I don't see that with Jeremiah at all. I see the excitement and the passion, but it's just something to consider. So it's like, for me, it's always, if you're not learning something new, or, you know, you haven't been challenged, or, you know, that's when I feel you know, us as kind of the scouts on the front end as well, we start to see, okay, it's not, the founder isn't believing in it anymore. And that's big. And we've been able to pull that from Zoom as much as we've been able to pull it from in person as well.
Is there sort of a targeted stage of company that you typically look for?
The short answer is no. You know, if we look at our core principles of leadership, commercial, strategy, legal and IP, finance, fundraising, each company wins at one, but overall they level out, and that's kind of how we see it working out. I would never, you know, as someone who's going through a lot of the due diligence, I would never discount someone just because they're pre-revenue or pre-product. Again, that comes back to the founder, the passion, the idea, the why, the knowledge.
So November 11th, we'll give you guys a little bit more detail as far as the formatting, but you know, it's going to be a pitch and a lot of Q&A.
Yeah, see everybody November 11th.
Founders are like patients half the time too, right?
That's it, yeah. But founders listen. That's the difference. Founders listen, patients don't.
An IV of funding.
Yeah.